IMF Chief Economist and Director Pierre-Olivier Gourinchas in the 11th April IMF Press Conference talked of indicators for a slowdown in medium-term global growth. According to the IMF Director, some of the growth slowdown is predictable, but for others, it would be a sign of ominous forces at work.
For emerging market and developing economies, this also means ensuring proper access to the global financial safety net, including the IMF's precautionary arrangements, access to central bank swap lines where relevant, and foreign exchange reserves. Exchange rates should be allowed to adjust as much as possible, unless doing so raises financial stability risks or threatens price stability, in line with our integrated policy framework. Our latest projections also indicate an overall slowdown in medium-term growth forecasts. 5-year ahead growth projections decline steadily from 4.9% in 2011 to 3% this year. Some of this decline is predictable. Growth slows as countries converge. But some of the more recent slowdown may also reflect more ominous forces: the scarring impact of the pandemic, a slower pace of structural reforms, as well as the rising and increasingly real threat of geo-economic fragmentation, leading to more trade tensions, less direct investment, and a slower pace of technology adoption and innovation across fragmented blocs.
According to the IMF, developing and emerging economies such as that of St. Kitts and Nevis, there is a need to guard against inflationary pressures, loose fiscal policies, and unsustainable programs stemming from the COVID-19 pandemic period. Matters relating to the labor market and job creation were also critical in the short to medium term for St. Kitts and Nevis, as indicated in the IMF Article 4 Executive Board Assessment for 2023. Quote, Director emphasized the need for structural policies to strengthen competitiveness, labor market development and diversification, and an optimal insurance framework against natural disaster risk, and endorsed the authority's strategy to transition towards renewable energy. They supported the plan for a sovereign wealth fund to finance resilient investment and ensure adequate fiscal buffers. Directors welcome efforts to improve the delivery and access to education and vocational training, which should be complemented by active labor market policies to reduce skills mismatches and promote job opportunities. End quote. St. Kitts and Nevis' Prime Minister has already hinted at restructuring several social assistance programs and the strengthening of the economy to improve the country's economic viability. Glenn Bart reporting for SK Newsline.